non-fintech has been the poster child of India's digital growth story. Just to give a perspective, last year it grew at about 157% year on year on just funding. The growth has been fueled by a mix of many factors. Some of them like capital surplus, maturing infrastructure, favorable underlying customer demographics. So let's kick off this discussion with a diverse set of panelists and experts. And I'd like to begin by introducing so we have with us Tarana. Tarana is the founding partner at InnoVen Capital, where she heads sourcing and execution of venture debt transactions, as well as portfolio management. She started her career with Morgan Stanley and the Radian Group, becoming a global finance professional, and has expertise in early stage to Series D funding through equity and debt instruments. InnoVen's portfolio has some of the best fintech startups that you can think of: CoverFox, Slice, MobiKwik, Zip Loans, Crazy P, MSwipe, just to name a few of them. Next that we have with us is Sushant. Sushant heads channel liabilities at DBS Bank in the capacity of Senior Vice President. He has 17 years of experience with diversified roles, including driving sales, relationship management, and project execution of strategic initiatives. He's currently focusing on partnerships to strengthen the core banking operations. Next on our panel is Darsh. Darsh is a 2X founder who ventured into the startup ecosystem in 2017 when he founded Ink.line, his first startup. Ever since, he has been associated with the ecosystem and stayed connected. He's worked with investment firms such as Goldman Sachs and fintech startups like EduPristine and Zell Education. He is also an ACCA affiliate, which is Association of Chartered Certified Accountants. Currently, he's building Monech that focuses on solving two problems: wealth decision assistance and family legacy planning and transfer. It's lovely having all of you here, and I'd like to dive straight into the discussion, and I want to begin with you, Tarana. So Tarana, InnoVen has invested in some very diverse startups like CoverFox, Slice, MobiKwik, right? So the range is from insurance to BNPL lending, recharge payments, everything. What do you think is going to have the most influence on the growth of financial technology? Where will the innovation and growth actually come from?
So I think, you have Darshan here. So as we all know, InsurTech, I think, is one of the big ones. I think we've seen a lot in the lending, trying to get people to sort of come into the markets from a credit perspective. Most of these guys are lending, payments. Where I think the next growth will come will be in wealth tech and InsurTech. Because I think as our population grows, aspiration grows, income levels grow, people will want to start figuring it out. There's the spending, but there's also the saving side that we have to look at, and growing of wealth creation. So personally, I think that's where I see a lot of opportunity coming, and it's broken, right? It's right now just it's sort of broken. It's not seamless. HDFC Securities doesn't talk to HDFC Bank, and you need them to talk to each other if you want to start building a portfolio, or HDFC Mutual Fund for that matter. So I see an opportunity in wealth tech, InsurTech. As people are growing, insurance, they're getting, insurance in general, penetration is extremely low as a country, right? So I think that's where we'll see a lot of, I think the regulators at RDA are trying to sort of promote that people take on more insurance. So I think these are where, there's a room for disruption, let's say, because there are pain points and it hasn't been seamless so far. Those are the two places I see some opportunity. And obviously,
Go on, Tarana.
Yeah. And obviously, we will continue seeing a lot in the sort of credit, right? We are seeing the innovation there. There have been some hurdles that have come their way recently with the new regulation, the digital guidelines that have propped up. But from what we're seeing through our portfolio is they are all trying to sort of see how they can maneuver it. And I'm sure between the RBI and the government, they will figure something out, because, I think it's, I should not be saying this off the record, I think, or not even off the record. I do think that some of these guidelines that RBI came out with was much needed and required. I think we were all becoming a little careless. But should they have come out with these maybe 2 years ago? Is the timing correct, appropriate? I'm not so sure on that. So I think that they're going to have to find a balance. There's too much money gone in now to
Right.
figure out some sort of a balance where it makes sense, because you can't just pull this credit out now. It just won't be healthy.
Right, right. No, absolutely agree with you on a lot of those things. InsurTech is a growing sector. We see that's going to grow. And yes, there are broken systems and we'll have to fix. But I'm going to sort of reserve the last point on regulations and guidelines, and I'm going to come back to that in a bit.
Sure.
But before that, Sushant, I wanted to understand, is there something that, you'd like to add to what Tarana said in terms of the innovation areas that you think it's going to come from, what do you think?
Firstly, a very good afternoon to all the people who have logged in at on a Saturday afternoon. I think very, very good afternoon to all of you. I think fair points by Tarana in terms of where the industry is going, where we've seen the noise before, where we are seeing the noises change. I'll add a few things to what Tarana said and a little bit of my own take on this. Is yes, we've seen a lot of stuff happening on the credit space, but again, sticking to fintechs, I see a lot of excitement coming in the B2B space in terms of overseas payments. Platforms being able to cater and go down the mile into tier 3, tier 4 locations, helping importers, exporters, and that's a very exciting space. If you ask me personally, if you're able to go down there, because that's a segment which typically struggles with banks, and if you're able to create. So even if I were to take a step back and just look at how the whole fintech space evolved, initially it was fintechs that come to take over banks. Initially, banks got scared about fintech, saying that okay, they are here to disrupt us. But I think over the last 5 or 6 years, everyone's realized that we can coexist and we need each other. The banks come in from a history of 150 years of being regulated and knowing how to deal with people's money and how knowing how to deal with an RBI, right? And the fintechs comes in from a space where they say we can make, and like what Tarana mentioned, we can make you talk far better. We can create seamless environments for you to thrive in, and we can get more customers to you by just enhancing a user experience or understanding the pain points better, because you are more agile. The fintechs are more agile. The banks are always built on a very traditional, robust, kind of systems that we kind of take time to develop or change, etc. That's where the fintech, and then now we realize, that we can coexist, and it's better if we coexist, and we can do wonders. So I see huge legs in terms of partnerships being announced, in terms of fintechs working with bank. That whole fear for both the sides, actually, it's not just the banks, even the fintechs, what they initially came out saying we'll displace, the displace is gone, and the partnership spirit has kind of come in.
Awesome. That's brilliant. Actually, when you mentioned overseas payments and helping importers, exporters, I'm not sure how many fintechs are actually thinking on those lines. And those are huge opportunities by sheer volume and the pain area that they both represent, right? So Darsh, as a founder, right, you're in the thick of building things. So what do you think is going to propel that growth as a founder? What are the factors that are going to change that?
So first of all, hello everyone, and thanks for the question, Tanul. So there are, broadly speaking, I think there are two key areas that I see the growth coming for fintechs, and these can be divided into B2B, B2C, and direct to consumer opportunities as well. Now, if I were to speak specifically on the direct to consumer model, I would say that there is a lot of partnerships building wherein there is growth there. I think there is a lot of partnerships that a fintech today can partner. There can be a bank, it can be a co-fintech, it can be an on-ground CA or a lawyer or multiple other such opportunities which are there in order for them to sort of scale up and build multiple partnerships in order to ensure that they all become a part of the ecosystem. I think that's the way in which the ecosystem is also moving slowly and steadily, wherein we're seeing a lot of these fragmented components of the systems coming together and being a part of it. So I think that's one on the direct to consumer space. I think on the B2B2C, I think Tarana and Sushant put it very well when they said that you need banks and mutual funds to coexist. I think that's a very good and maximum mutual funds to partner. I think that's a very good point in itself, because as when we are building Legacy Next today, we are actually seeing that as one of the key problems that we are solving. Because a bank today can, if you want to claim your inheritance, it's very difficult for a bank to go ahead and do that. So I think that's one of the things that we have identified with banks and financial institutions, and we are happy to also engage into multiple partnerships with banks today. And so Shant was one of our key ecosystem enablers for us as well. So yeah, we are happy to do that. Yeah.
So thanks, Darsh. So one thing that we see coming out, right, is that one of the key problem areas that's emerging from all three of you is broken systems and systems talking to each other in the fintech space. And anybody who can work on that and focus on that will change that, right? The other thing, that I wanted to talk to you, Sushant, about is you've sort of been working and handling channel liabilities. You have spoken about strategic partnerships today, and I know that you've built some very exciting and effective partnerships for DBS, right? So what kind of startups and what kind of partnerships are going to get banks excited in the future? What is the kind of innovation and problem solving that they're looking for?
All right, I'll take that up. So very simply put, it's not even very complicated or not extremely tough to answer. I think anything that solves for customers, and if you keep the customer in between, and you figure out a fintech and a problem statement that you can't solve. So let's take legacy next for now. That since we have the show here, every bank would love to solve for we sell insurance, but we don't do anything post that. So every bank would want to figure out, is there a journey beyond just selling the insurance and covering that need? So if somebody goes and does actually the solving when a person is not around and create that kind of an infra, definitely a bank would love to partner. A bank would really find it exciting that it goes beyond just that sale and getting that product out there. But we are also telling you that, okay, after this is done, we'll also link you in with something like a legacy next, and we'll take the journey forward. I don't do it, but somebody is doing it and I get him on board. So I think anything today that we see missing in our kitty, we don't have to go out there and actually build. We don't have to go out there and actually spend time building a product. Somebody has done it. If there is a common synergies, of course, it's very important to see the team. I think we were talking to Darsh and his team a year and a half before even their announcement was coming in. But the idea is exciting. We stay connected, and when we have to go to market, let's do it together. Similarly, we are looking at platforms where, let's say there's a specific segment. So let's assume if I want to go after freight forwarders, we've done a partnership with a platform called Odex. It's a bootstrap startup, so it's not got the Sequoias of the world backing it. Nothing. It's a brother sister running this company for the last 5 years. It's a document exchange platform. All we've gone out there and said that, okay, you've got information and the clients that I would love to bank. I am ready to put in 50 lakh rupees, up to 50 lakh rupees of unsecured on the platform. And thereby you can increase your GMV. So now it's no longer a document exchange platform. It actually becomes a payment enabling platform and allowing credit to the people who are coming on the platform. These are all invoice payment made to shipliners. So it's a brilliant platform. So we see value in the platform. We see value in the ecosystem of customers that they hold, and we go ahead and partner with them. Now, the other thing also is could be startups may I may not say, okay, there is inherent value for us in terms of getting more customers, but a lot of customers need your services. I take you onto my partner platform. I'll take you on. I've created a platform where I can go and say, okay, list yourself over here, and I tell it to all startups. The banks, bigger banks than ours also, have thousands and lakhs of customers. We've got close to 3.5 million savings account customers. We've got close to a million current account customers. These are direct access. These are customers who are already banking with us. And if they need one of your products, we are happy to take you there. So that's another area I feel the bank comes in and says that, okay, I'll expose you to my clients. And what bigger for a young startup to get access to customers easily? Because it's you always confuse bank paisa dega ke nahi dega. But bank can give you a lot more beyond the 5 and 10 lakh rupees a very, very young startup can get through a grant. Because debt, I think Tarana will cover it. Debt always comes in at a slightly later stage where there's an ability to repay. In the earlier days, you want to build your client base, your customer base, and that's where we should be looked upon. We, DBS, as well as other banks.
No, I think that's brilliantly put. And I think that one point, right, where you said that banks are sitting on a base of customers, both corporates and individuals, who can use a plethora of services. And when they bring a service to their customers, there's so much more credibility and faith that startups can leverage. So partnerships in terms of not just selling your service to the bank to make it more efficient, but actually to leverage and create a meaningful bouquet of services, not just for their customers, but also gain customers, right? So, Sushant, I'm going to stick with you and dig a little deeper into this regulatory bit, right? Because we can't talk about fintech and not talk about regulators. And I think Tarana sort of, nailed it and said
Yeah.
that, the cleanup was long overdue. And I think a lot of us who have been a part of the ecosystem totally believe that, right? That the whole regulations were needed to sort of structure things out. But I wanted to get your perspective on how do you think startups should start budgeting and preparing for these kind of regulatory changes. So and especially when you're starting something new, right? Sometimes there's just no regulation around it, or it might be sort of silent on it. So how do you work and approach that and budget for that?
So I'll just maybe take off from what Tarana said. That regulation may come in a little late, but it's required. See, for every young startup, when you're dealing with people's money, whether it's investments, wealth, loans, anything that deals with people and their money, regulation will follow. Either it's already there or it's going to come, but it's not going to not happen, right? So the first thing is so look at it. If regulation was very tight, could some of these even fintechs think about what they wanted to do? The answer is no. So the one way to look at it, RBI allows you to do a few things as long as you don't abuse it, and then it comes in slowly. It's happened in every industry. It happens in SEBI for investments, IRDA for insurance, and banking through RBI. So when people also come and tell us, why don't you all give loans to startups? I am regulated. I can give loans, at the same time I'm questioned if I have my NPAs, right? So we are conservative in the way we go about approaching. There was a day we should take tons of balance sheet. Now we do with bank account statements. Tomorrow we'll do with GST. Thanks to a few fintechs, we will get easier, but it's not going away. And I think a lot of young entrepreneurs, fintechs, also need to understand that dealing with people's money is extremely sensitive.
True.
You see, and one bad apple spoils it for everybody else. Look at what's happened in the loan side, right? This whole consumer loan, uh, the NBFCs going berserk just because they're getting paid a fee. This whole thing catches up, because then there is when you're unregulated, you do a lot of stuff. It happened with banks, right? The way we did our collections 15 years back is very different from the way we do our collections today, right? The horror stories of how Citibank used to do their collections and card collections 10, 15, 20 years back. It all stopped. So regulations do follow. It'll never be always printed at the beginning, because if it's done that way, you'll not have a space to innovate and do anything new. So your innovation will get curbed. Your idea to think. But always when you're dealing with people's money, be sensitive that regulation will follow, and don't spoil it for the rest of the world. There are some people doing some great work, and there are some people who do stuff like this. So I would say that fintechs need to look at it very seriously. Everything digital is always not possible. I always talk to the young ones and tell them, I understand, but there's always a physical leg in banking, where you need to go and see the person in the eye when you're giving the money, because it's not about giving the money in credit. It's about getting your money back. It's always there. So you always need to keep that in mind. And I think fintechs, regulation, RBI, like Tarana mentioned, will find a way to work together. It's not going to go away. Even in banking, there are pauses that always come. Imagine being there for so many years, how many things we do, and every year banks get fined for something or the other. So we are always under the watch. We are always being checked. We are always being audited. And all of that, trust me, Tanul, is always for the betterment of a consumer at the end of the day. And we need to look at it that way, that at the end of the day, it's in our interest in mind. Otherwise, no sweeping person can come in and take thousands of crores away, and we'll all be wondering we could be one of them tomorrow. So it works in the larger interest, and sometimes it looks like an impediment, but it isn't.
So three key takeaways that I see. It's saying that initially, if there is a silence, or there is ambiguity, it's good because it helps you innovate. When you innovate, the regulator will step in to regulate the sector, because you need to let the customers have faith. Otherwise, you're going to be sitting on tons of public money, which could be misutilized. You can always work with regulators and banks as young fintechs to actually fix that and work on that. Tarana, as an investor, right, when you're evaluating a new area and a new segment, how do you think these kind of ambiguities or changing regulations play? You know.
I think we as investors, we always sort of we always sort of, we're always aware, right, that regulation could come in. So you sort of do price it in. Yeah, as I said, when I first made the statement, that kind of would have been good had they come out with this slightly earlier. But I think what we're learning, like Sushant said, is to maneuver it, right? That there will be the fintechs and RBI and the government will figure out how to make it all work. And I think that's what we're seeing right now, right? The banks, the fintechs are going back to figure out what do they have to exactly do. What is the guidelines? First of all, I mean, the details have to come out. But once they do, but I know everyone's trying to preempt and figure out how do we make this work and how do we make it kosher. So I think as investors, we just have to have some faith that these three bodies will work together and that we'll work with them instead of panicking. So I think we just need to sort of be a little calm and rational about it and figure out how do we make it all sort of fit together. I'm going to take a little bit of a disclaimer. I am in a slightly better position because I'm debt. I'm not equity, similar to Sushant. So we're generally on top of the waterfall. So in some ways, I'm safe in that sense. So I'm a little more calm about it, but I'm sure for the equity investors, it's not an easy place to be right now. And I'm sure a lot of the large guys who came in the last year, when the euphoria was there, are like, what's going on? But as I said, I personally think this was needed. Like to Sushant's point, right, on credit, I was talking to someone recently being part of the startup ecosystem. I think the two places like Sushant, when you're dealing with people's money and people's health, you just have to be held to a higher sort of diagram of what your responsibility is. And so, of course, fintech falls there. And I just think that we just, we are seeing what's happening to BNPL globally, right? So I think if as a country we're sort of being a little cautious right now, it's not a bad thing. We're preempting for some larger disaster. That's the way to look at it as an investor, that could this help us maybe prevent something even more chaotic happening a year or two down the road with something like a BNPL. So
that's well,
as investors, we always have to be optimistic.
Well put, Tarana.
So Tanul, just add a point over there. I think to even Tarana's point, which he mentioned, I think the only key word is accountability. Once you are able to pinpoint accountability when you're dealing, you're right. There are 3 or 4 things, like people's health, their life, and their wealth. All of these things are very, very sensitive, and we need to just put accountability. Second thing is, yes, please read the whole global story around BNPL. If you're preempting it, it's brilliant, boss. Look at what's happened in Australia. When I talk to people and I'm telling, just read the report, it's gone. There's no BNPL. And I heard stories about people saying, I use BNPL to buy bananas nowadays. But it's all good. Yeah,
exactly. And in the US, and the developed world has better credit. We don't. So
yes,
what are we doing? So I think that's a balancing act, right? Are we like, I lived in the US for 15 years, and as Indians, we are taught to save, right? And I think that's what saved us as a country in some ways. Why are we encouraging? Like, I look at the young associates in my office and they live on EMIs, and I'm like, what the hell? Like, why are you not saving anything? Like, that's not the culture to encourage. So I think there's a balancing act, personally. Sure. And then, of course, the AP, look at the fine print on what you're paying for it, blah, blah. You want to encourage credit for real productivity. That's the way I look at it, for education, for work, things like that. Not for like Sushant said, to go buy bananas or to go buy, crazy stuff. Like, it doesn't work. So anyway, I think you have the wrong guys on your panel, by the way, Tanul.
You know what? I totally agree with this viewpoint. And I've had individual discussions with each of you, and where I stand on this, right? Because when you're dealing with people's money, right, and when you're dealing with technology, when you combine the two, the impact is so huge. And India is a supremely diverse country. There's so much of underserved population that you need the regulator to step in and say, hey, we need to fix this before things sort of.
No, and you want to bring them into the credit fold. You want to, but I think it's about how and when. Going and charging them 40+% interest is no better than what they're getting right now. You're just being another version of a loan shark. So that balancing out is required, in my personal opinion.
Darsh, as the only founder in the room, what's your perspective on regulations, and what do you think it does to you as a founder in the head?
It is definitely a tricky question on a panel, but I'm going to try and be as honest as I can. So I think regulations are good. I think let's go fundamentally, right? Why was money there? right, money came into the concept as a part of a system, right? Now, if money is a part of a system, that system will have certain rules and regulations that will be there for you to operate in that system. I think that's where we need to go back to the fundamentals of where money came about. And that is where I think everyone who's building a product which is even close to money, right? Be it wealth protection, be it wealth creation, being wealth management. Tarana did mention wealth tech to a certain extent. And I think when you go into wealth tech, I think the very important point to focus is that there is a possibility of inaccuracy when you get into wealth tech. Once you get into artificial intelligence and once you start building products that are not essentially that you don't have essentially full control over, I think that is where you need to identify what checks and balances to put in place when you're building these sort of products and when you have actual consumers consuming your products. So in fact, at Legacy Next, I think our goal has always been to build a value-based product and an offering for consumers. And the way we see it is we are first tackling the wealth protection piece, right? I think that's very important in an Indian construct, wherein wealth is such a very important aspect in everyone's lives and even to the next generation. Because think about it, right? Most of the generations in India right now are currently going through probably the second, big, earning phase, right? I think the previous generations were more about getting into the middle class, and the middle class is now sort of unlocking that value. Now, when you reach a phase like that, you need to be very conscious about the kind of, decision making that each and every member of the family does. Because at the end of the day, when they actually go and say that, hey, these are the things that we want to put our money into, that has to be a very conscious decision and that has to be a very thought out decision. And Sushant did mention this, that there is a physical layer. And I think that physical layer is very, very important, especially in the day and age that we are in, wherein everything is moving towards technology. I think we need to be very conscious about having that bridge between a physical and a digital layer, and which is where I think the regulations are playing a very important role in telling us that even if you go fully in technology, what is the amount of technology that you can actually adopt in real life? Because that is very, very important. Because if you there has to be a balance between having, because think about it, right? Social media existed for a while, right? COVID taught us that we were all on social media, right? I mean, everyone was just there having conversations with each other and being virtual. But then what happened to Zoom, right? What happened? You need physical interactions, you need that vibrancy, you need that culture, you need that trust. And I still think very strongly that trust is still built with in-person communication the most, right? And I think that is a very important factor, especially because money is a concept about trust, right? When you're talking about money, it's a very important aspect to consider, and I think that balance is very important, and regulations help us do that. So that would be my take on this. Yeah.
Awesome. It's always refreshing to hear that regulations are good and you need to work with them. So I wanted
Collectively,
to. So, Sushant, there's another question that I wanted to ask you, right? And I wanted to understand. There is a huge, underserved population. Most of the fintech growth has right now come in from urban areas. The tier 2, tier 3 cities are still sort of untouched by this whole digital revolution. What is the role you think banks and fintechs can play in terms of educating the customer for better customer adoption and growth? Because that segment has sort of adopted WhatsApp beautifully, right? But when you deal with money, there is so much more repercussions. What do you think that fintechs and banks can do together to take this forward?
So I think that's the most exciting space, if you ask me, because there's so much of stuff you can do in tier three, tier four. Tier ones are saturated, overbanked, too many people chasing the same people. But there's so much action. If you ask me personally, and with the way my bank has also moved, has been in this whole segment. So we moved from a typical MNC 30 branch bank to right now a close to 600 branch network with across 20 states. So we're now present in every nook and corner, hopefully, and rebranded by the end of the year as DBS through our LVB acquisition. But if you ask me, what we can do together is basically, I saw somebody from GrammyPay also as a part of this thing, because I've heard these guys out in a few other sessions that are doing great work in rural and semi-rural areas. You take a bank along, it gets more credibility. That's all I can say. What people use a lot of WhatsApp because today WhatsApp has gained credibility. People have started to trust it. People know that there's certain amount of trust in it. But if you are going standalone into a tier three, tier four location, and if you have a bank along with you, I think it adds a lot of weight. And again, I'm not saying DBS, I'm saying any bank, I'm saying any regulated entity, because they have seen that for 100 years. So look at, when we talk about Lakshmi Vilas Bank, the bank that we took over, it's 100 years old in Tamil Nadu. Now, when I go and tell them I'm from LVB, or an erstwhile LVB guy, it creates a lot more comfort for them to deal with the person visiting as compared to somebody who's just coming in and starting something new. Yes, the adoption is there, but everything in India needs to be handheld. Your adoption, and there's some adaption to adoption kind of number that you would look at. You need hand holding in India, and hand holding becomes easier if there's little amount of familiarity in these markets, little amount of credibility that you're able to create. And that's where I think fintechs, banks can work together. Yes, we can serve that population far better. So this B2B thing which I spoke to you about, Tanul, is actually there. We are working with, again, a very young startup. I will not take the name right now, but absolutely saying to what absolutely aligning to what you are saying right now. They are going to go to the underbanked or the guys who are dealing with cooperative banks, where they take 7 days to make a import export payment, and through a digital route now can do it seamlessly with a multinational bank,
That's
without
beautiful.
me. And we are not physically present. We don't want to be physically present. The 550 branches I spoke to you about is because people still ask the question, bhai tumhara branch kidhar hai? you know
Sure.
but if you're given a choice, we don't want to be seen. And again, when we work with most of these partners, we will be powered by DBS. Your platform, I'm in the background. The
Right.
entire concept for the bank right now is, can we play without being right in the face of the customer, and can we play in the background? So there's huge amount of synergies that can happen. There's huge amount of untapped potential that we can genuinely go and tap in these segments, and the customers are ready. Some of the fintechs that work in places like Ongole and Odisha, where I went to, the stuff that's getting created and adopted by even someone told me about the fishermen using an app where you can come to know there's a school of fish before you actually go out and take your ship. Saves so much on petrol, time, and knowing where to exactly go and hunt. And fishermen are paying it like a Netflix subscription. We wouldn't have thought of it maybe a couple of years back, but it's happening. So I think there's a lot of stuff that we can, kind of work with. Don't take your audience for granted. They're smarter than you, clearly. And what you need to do is basically, tie up with the right people. The right fintech has to find the right bank. The bank has to find the right fintech to work with, and your ideologies need to match. Just because somebody is doing something, the other bank need not rush and say, I will also tie up with all the fintechs. It may not be your vision. It may not be your core DNA to go and do that. So pick and choose your partners well, pick and choose your banks well. And I think then you can see us capturing this huge, massive market that we live in. And there's business for everyone on that side.
That's true, and that's absolutely true. Darsh, you're in a segment which needs a lot of customer education right now, right? It's also extremely sensitive. How do you think partnerships help you work on that better, whether it's corporates or banks? As a startup founder, what would you tell other startup founders to do when they focus on partnerships? How important is it for customer education?
Firstly, I think partnerships are I think the best and the fastest way for two things. One is for a customer to understand the product, and for a business to reach the customer in the fastest manner possible. I think these are two key aspects that every partnership enables you to do. And I think rightly, like Sushant mentioned, it is very, very important to find the right partners which align with your services. I think that is very important because so at Legacy Next, in fact, we have partnered with DBS Bank, and we have partnered with multiple other additional startups, in fact, as well, in order to extend our services to their consumers. And the key value that I think we have found is that one is of course trust, and the second is being able to reach them at the right time. I think that is also something that has helped timing these conversations and the insights that you get from a partner, right? Like for example, a DBS bank would definitely help us understand a bit more about the consumers. A company that has already been working in the pension space would help us understand what their consumer mindset is and how we can probably curate our offering specifically to that kind of an audience, right? I think these are certain insights from consumers that are very, very important. And for startups who are young, and especially for us, since we are a young startup and we are in the midst of scaling right now, for us, it's extremely important to get these consumer insights in order to reduce our costs as well. right? Because costs, I mean, these are not, as right now the name of the game is as lower the cost as higher the revenue, right? I think that's what everyone, and I'm sure Tarana would agree with me on this, that we have to have a very cost versus, we have to be very conscious about the costs that we put in. And I think that's the way you need to sort of identify that what is the right value that that partner is giving, and you need to find those kind of partners. I think these are three things which I find very key in every journey of scaling up a product. Last thing that I would probably say is partner adds value, right? Because at the end of the day, you are in the business to add value, right? Even if you're in the business, you want to create impact. At least that's what we at Legacy Next want to do. And when you are partnered with people and when you're going together, I mean, imagine a family, right? That can see a wealth management platform, a legacy platform, and a pension platform, for example, all of them together, right? And if these all three of them go to them together and actually have that conversation with them, that would actually enhance the ability for the customer to also come in and would also give them multiple offerings, right? So I think value coming together is also something that fintechs should try and create. I think that's a very important point, because right now there are so many fintech startups in India, and all of them are reaching to the same audience, right? And most of them are reaching to the same, 2 crore, 3 crore, or 5 crore, the top tier of the audience, which probably is also a part of Cred or any other platform, right? So I think most of this is happening in the tier one segment, the tier two cream segment is also now, sort of reaching that target market, which most of these companies are also targeting. So I think these are four key advantages in terms of trust, value, cost, and, benefit in terms of understanding about the ecosystem. So I would like to bring in that way. Yeah.
Tarana, I'm going to try and squeeze in one last question before, I break it open to the audience. India has been the epicenter of the fintech revolution. Do you think we're going to see more global players entering the market and trying to grow? And what do you think are the challenges that they could face in terms of operating and growing? And what do you think our fintechs could do to leverage that better?
I think, yeah, I mean, the short answer is yes. I do think a lot more global players will come. I mean, look at it as fundamentally, we are at the cusp of things, right? I mean, look at UPI, what we did with UPI. I mean, we're far ahead of anyone in that. And I mean, having said that, even look at, I mean, all said and done, we can, Paytm stock may be taking a beating, but it's created a word, right? I mean, we have a verb out of it now, that can you Paytm me?
I agree.
So I think we have sort of been innovative. We do have, I mean, as I said, fundamentally, we have one of the youngest populations. We have one of the most aspirationally growing middle classes. So all that makes it very conducive I mean, it's, in my opinion, there's no doubt that we would, guys, I'm going to switch off. It says my internet. Can you hear me?
Yes.
Okay, because it went completely quiet. And it said internet is unstable. So I think globally, we are, I mean, why wouldn't anyone want to not look at us? And we're, bringing in the regulatory aspect, or what innovation. I think we'll see a lot more innovation. We are seeing, right? I mean, think what we've done with all the, from the Khata books or the Pine Labs or the M swipes. They have sort of brought in a new fold into the financial services, right? I mean, having said, they are providing credit or ability for these guys to go digital or whatever they may be. But so I think there's room for more innovation as a country. In every aspect, right? I mean, as I said, we've seen enough in payments and lending. Maybe we'll see a few more pieces there, but just in between insurance, wealth tech, I mean, there's so many other things that come into play, right? I mean, those two are pain points that I think complain about. But even just like maybe educational loans, for students, or, we're seeing some sort of models come out there. But so I think, yes, I personally I'm a strong believer that we can be forerunners in this globally. I mean, we have the opportunity. We are probably one of the few countries that, as of right now, doesn't look headed into a recession, right? I don't know if slowdown, yes, recession, no, I could be wrong.
Right. No, thanks. Sushant, Darsh, anything that you guys would want to add to this?
No, a little bit to what Tarana said, I think, was that, we are one country which is not slowing down, at least at the pace at which the rest of the world is slowing down. So we will slow down. We cannot completely isolate ourselves from all the global ripples that will come our way in the next maybe 18 to 24 months or so. But we look kind of isolated purely because of our size. because of our consumption power. Technically we consume as much, right? So that helps us. I also think, well, it's not said that often. The government is doing its own bit to kind of propel this ecosystem. There is so much that the central government does through AIMs, AIC, which we've not seen before. Let's be honest about it. We are seeing all of this happen over the last 3, 5, 8 years, and mostly you'll see a lot more stuff happening. So I also think that the government is doing its bit. Some may agree, some may not agree, but when I go out and visit, I feel they do a lot more than they talk about in this ecosystem. Because otherwise, everywhere else they talk a lot of things, but they don't talk as much. But you see AIMs getting funded, AICs getting funded, the scientific research team doing something. Spaces which will really open up in India will be space tech, deep tech. Apart from the regular stuff, we are now opening up private space out. We've had a company called Digantra who's already shot out an satellite into space a few weeks back. And it was exciting to meet these founders. A couple of months back in Bangalore was coffee in Starbucks, like I meet Darsh. But that time the guy wanted an extra scoop of ice cream in his cold coffee. But 2 weeks later, he was in Man Ki Baat, and 3 weeks or 4 weeks later, they have launched their first satellite. It's brilliant. These are the kind of stories you hear about, and really makes your day. And it goes back to that extra scoop. I'll never forget that extra scoop of when he innocently ordered. He said, "One more scoop of ice cream in my cold coffee." So I like, okay, ठीक है. And this is how it's going. You'll see a lot of stuff coming in from small areas. I've met people from towns they didn't even want to mention. Say that, sir, आपको नहीं पता होगा. And they're launching their first apps. Even before their name company got registered, they're raising 2.5 to 4 million through investors locally in India. So I think there's a lot. There's no dearth of money. There's no dearth of opportunity. People like you, Tanul, are creating, space for young startups to come and try, experiment. I know the kind of effort Afthonia puts in terms of kind of trying to bridge partnerships, make people work, follow up for Darsh to me on his behalf. All of that stuff happens, right? So it is exciting, and these are enablers. Like I would always tell, my dad had a running business. We are Shettys, we run hotels, and nobody came and funded my dad. My dad had to sell his idli and vada to earn his money, right? Today, a young kid gets that impetus through incubation centers, through accelerators, through people like Tarana who have launched InnoVen. There is all of this access which was not there 10, 15 years back for a young business. So it's business, right? You call it startup, yeah, naya business. It's the same thing, right? And it's eventually the same thing. What we used to call नया business जिसके पास 3 साल का balance sheet नहीं और हम उसको loan नहीं देंगे is now being called a startup. That's about it. But now this young generation like Darsh and his gang of people who are doing, they have a little bit of a soft cushioning and a launch pad where they can take off from, which was maybe not there 10 years back. And I think that should empower the next 10 years for India. And I think that is what's doing. And the whole mindset's changed, right? People don't want to work. They want to start something and build and create something. That itself is a huge
Future.
change in the way this next generation will kind of approach work, and this country will do better in that way. Yeah.
That's brilliantly put.
I'll
All right.
just sort of add
Go
a
ahead.
final word if that's okay.
Yep, go
So
ahead.
I think like Sushant rightly mentioned, I think these are I think like everyone says, and like I think I remember Mukesh Ambani in some video, he had also said something around these lines that the best of India is yet to come, and especially in fintech, and I think that two things have happened because of us probably slowing down. Is that one is we've realized that just because a product has technology doesn't become a fintech. I think it is more to that, and there are layers around that you need to build. It could be physical, it could be tech, it could be anything, right? But you need to build value, which is a consistent value and not just an immediate value, in order to be able to sustain in the long run. And I think that is something that has definitely happened, and that is something that I personally see happening a lot now than it was probably a year and a half ago or a couple of years ago. I think that's the first thing. The second thing is definitely, like Sushant mentioned, is being part of ecosystems, and especially part of ecosystem like Afthonia, right? I think Tanul and I have had long conversations about how the future of fintech will be, and what we see it happening. However, I definitely think that um, uh, you know it's not just about um, being a part of this industry, right? It's also about how ecosystems like these enable people to have the confidence that they can be a part of the larger ecosystem. And I think that's the biggest impact that any person, like Sushant mentioned, from a young, from a small town can also, think of, right? I think for them, it is just being able to have that opportunity and being able to think, right, the mindset that we can do this. I think that is what is going to matter a lot. And yeah, at Legacy Next, we're really excited to work with these people and Monech, and we're really excited to build these sort of futuristic products, like we say on our website, is welcome to the future. So yeah, we would love to do that.
Nice plug, Darsh. All right, guys. I want to throw this open to the audience. So if you have any questions, please send them out and we'll take that up. Is fintech still booming, or is it a bubble which will burst next year? It's to everybody.
I'm going to let the investor take this first, if that's okay.
Oh, that's unfair. I don't think there's a boom or bubble. I think basically, will there be a slowdown and will we see sanity check come in? Yes, I think the last 2 years was a little bit of a bubble, but it just wasn't for fintech. It was all over. We just saw it more in fintech because larger checks came into fintech. So will we see a sanity check? And if you want to call that a bust, you can call it a bust. But I think a slowdown where valuations will be more measured, definitely in the next year, which I think is a good thing. I think there was a little bit of too much euphoria and insanity and frothiness in the market. So
Tarana,
I know Darsh is not going to agree as a founder. He's like the heart, but I think it's about genuine value creation at the end, right? You want to be able to grow into and justify that valuation. That's the way I always look at it.
Tarana, if you know, I've sort of come around on that. So.
No, not you. I'm just saying generally, as
founders won't agree, is what she's saying. But I agree, Tarana, there will be correction and valuation. I also, to your point, larger checks won't be cut. There's one very interesting question. It says, how do you see blockchain or Web3 impacting fintech in the next 5 years?
Well, I think right now there's a little bit of a setback to that. I think blockchain, see, Web3 is still hard to say, but blockchain is a tech that can be used, right? It helps. So I would think that over the next 5 years, we will see a lot of things be able to go digital in terms of record keeping and all, which, I mean, Darsh can speak more to this as insurance and, maybe wills can be measured digitally and things like that. So I think there's an opportunity, yes. But I'm not a techie. I'm still a little lost and figuring it out myself. So hard to say much.
Darsh, what's your take? And also, Sushant, I want to sort of get your head into this after that. Do you see banks using blockchain more effectively and more frequently? So after Darsh, we can come to you.
Sure, happy to. So I think like Tarana rightly mentioned, I think there is definitely blockchain is going to unlock a lot of elements about finance that we have not seen yet. And I think the simple part that blockchain is a system that can be trusted, right? I think that's the biggest component that makes anyone in the industry excited, and anyone who's using blockchain as a technology stack excited. And especially for us, because we are also over a period of time going to move into data security over blockchain, right? I mean, look at the opportunities that a blockchain ecosystem can open up for for the fact that it is right now a system that has not been penetrated yet. That is very, very important. And second, it just gives you the ability to fragment your data, which over a period of time, I mean, in fact, it is right now as well, is extremely important to any fintech, right? And to any company in the space. So I think these are two key, concepts on which blockchain can evolve. And there is a proven, ability for a blockchain. In fact, if you see in the US, most of the companies have already moved. I mean, the good companies have already moved to such an ecosystem. So that is one. And I really think that even as Legacy Next and Monech, we will be moving into that zone, if sooner, if not later, if not sooner, if not later. That's one. Second, I think Web3. I agree with Rana on that. I think it's too complicated to understand at the moment for a lot of, especially when the relation of that comes into fintech, right? I think There are certain components which you can bring into, but however, we might want to wait and see, what are the layers that we can adopt on our platforms in order to make those more valuable, make them more engaging, make it more customer centric. I think those layers we have to pick and choose which ones we adopt and how they sort of synergize as and how we go ahead. So I think that would be my broad take on these two aspects. And yeah, I think Sushant is excited as well. So I'm going to let him take it.
Yeah. So I think blockchain is quite a no-brainer, like what Darsh said, because see, we don't have an agile system, so we generally take time to adopt to a change. That's about it. But like you said, there are lots of banks already who are using, even in India itself, you're using. See, blockchain is only going to help you optimize your capital better. It's also going to be, like Dash mentioned, it's a trusted ecosystem. It's a secure ecosystem. It's not outside your entire thing that you're going to build. So all the data available is only going to help you, disburse money far easily, quicker, and in a more efficient manner. So I think blockchain is definitely going to be something that banks will adopt and work with quickly. When you come to even stuff like Web3 or Metaverse, again, not a techie, but what we can say is, as a bank, DBS is committed, and we've already started working on the entire Metaverse piece, right? And we have said that we will be one of the best banks using Metaverse. That's what our global CEO has gone ahead and actually commissioned. Even I was surprised that the whole tech team has already started work, because the way we would want to look at ourselves as a bank, and it started and he's made a public announcement around it. The way we want to see it is that we want to be looked as a tech company eventually. That also does. When I said that we will want to work in the background, it's purely because of that. You want to be like an Intel in a computer, right? Powered by Intel, but you're not. You're sitting on somebody else's hardware. So I think that's the philosophy in which banks want to move, and that's what they realize that. But see, when it comes to existing, and kind of, that's why I said we started fighting who's superior, and we ended up saying, okay, we can coexist. So I think similar to that, we will do metaverse. You'll see banks, and now banks have woken up to the fact that we need to be slightly ahead in this game and not always be playing catch up out here. You asked me another question, right, Tanul? Something else was something.
So there was two more. So we'll just take two ones quickly. One is, how can an entrepreneur who's non-fintech benefit from fintech revolution in India? That's one. And I'm going to throw the last one to Darsh before that. But Sushant, do you want to take this about how
Maybe
can
the first one also. Maybe the first one also to Darshani.
Darsh,
How
okay?
can,
Who's
because he?
yours?
Yeah.
So we'll,
Go
we'll
ahead,
send both
Darsh.
to Darsh. Okay, Darsh.
Yeah.
How can a non-fintech entrepreneur benefit from a fintech service?
Sorry, fintech ecosystem or fintech service?
From fintech startups, other fintech startups, or the
Okay.
current fintech landscape.
Okay.
I think that's
Got
what
it.
they mean.
So I'm slightly sort of trying to figure out what they mean when you say non-fintech a little bit, and because, so I'm gonna answer it in the way I think I understand it. So I think if you're someone who is the question, someone who does not come from the fintech space, how are they
Yes,
kind of
if
sort of?
they're an entrepreneur and non-fintech entrepreneur, how can they
Wait,
benefit?
that's let me take a jab at this one. Let me take a jab at this one. So I'll give you an example. Okay, not necessarily all platforms are fintechs, but they get an ecosystem where maybe someone like a bank would like to have a play in. So like the example I gave earlier, there was a fintech which only dealt in document exchange, where invoices got raised and invoices got submitted. Nothing else. There was no money. There was no transactions happening on the platform. There was nothing. But you see a use case over there as a bank, and you come in and you say, okay, you're sitting on so many invoices, so much data. Can I go and now become your payment aggregator, where you can say pay via the platform, take credit via the platform. So suddenly, from being a pure standard data exchange platform for documents coming in and out, you are now enabling payments on your platform. So yes, there are many use cases where you may not exactly be a fintech, but you may be talking to somebody to kind of expand your universe of services on your own platform. Today I might be a solar provider. Okay, it's damn interesting. So I might be a solar provider, but solar provider, you will never assume that could be a fintech. But what if I'm somebody who says that, boss, I am the one who's only going to provide finance to SMEs who want to put solar panels to become a far more efficient business, and I will lend to those guys, and all I will do is I have my set of EPC contractors on one side, I have my set of financiers on the other side, and and I will bridge the two. So whenever your company wants to go efficient in maybe solar or becoming bringing your overall cost down, I will sit in between, I will operate, I will help the bank recover money, I will help the guy who's on the EPC side get the contract. And you can be rest assured at the end of the day, my guy is not going and putting the solar panels in. So as a platform, I'm only becoming a bridge. So again, not a fintech, but actually you will not assume somebody doing solar to be a fintech, but it's actually a
Right.
fintech. At the end of the day, his revenue stream is through the money that's getting lended on both sides. I hope that gives some sense to
No, I think so.
what you had asked. Yeah.
So quickly, last question, and I think I want Darsh and Tarana both to take this. It says, how can a startup own distinctiveness? What role does good branding play in the current landscape?
Sorry, Tanul, can you repeat that once?
Yeah, it says, how important is distinctiveness for a startup, and what role does a good branding play in the current fintech landscape?
Okay, I'll take this. I can't speak on the marketing branding. I'm not a branding person. I think when you say distinctiveness, I'd like to say that, okay, do you have a real good quality product? So that should be your key distinction, right? I mean, you could be doing something that someone else has done, but are you executing better? You have a better product. And then hopefully that the product will create the brand. I don't know. I mean, branding of course helps, but I'm no branding or marketing expert to comment on that. So I'll take the easy way out and let Darshan handle it now.
Handle the branding. I think that's something he'd like to.
Okay, I'm trying to avoid going into one of those long conversations about branding, but I definitely I think Tarana hit the nail very well on the head when she said distinctiveness is important, right? And I think I would like to I like to quote I think Steve Jobs when he said something about that with great branding you need great experience, and great experience requires a great product. And I think that is the fundamental of a business. I think these are the three key areas which every business should strive to work very, 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 hard at, because there is how much ever good product, that you talk about it. At the end of the day, when people start using the product, when people experience the product, that is when the actual value of the product comes into life. And I think one of the aspects that I would also say is that today when we talk about Apple, or when we talk about Nike, or any of these products, right, when we talk about these products, it's not just because of the fact that they're great brands. Yes, branding is imperative to scale. I think it's very, very important for you to brand, for a business to be able to brand itself in order to scale to the level that they would like to. I think that's very, very important. But however, in addition to that, I think it's very, very important to also ensure that the quality doesn't of the product does not slack away. And that is a very, very conscious thought that I think every business must also give to each of its divisions. Because when you're building a brand, you can definitely talk about being probably an aspirational brand, or a trustworthy brand, or a brand which is value focused, right? I think these are many areas in which brands can play. And I think Indian brand specifically, in the last year or two, once the creator economy started opening up, have started to realize the power of branding. I think Indian brands are now actually talking about themselves as global brands, which was not something that we had seen in the past before COVID. And I think that is a very good and important change that has come up, and I'm really excited for that, because at Legacy Next, I personally have a big affinity towards branding the right way, and branding towards what the brand actually represents. And I think the brand gives an emotion to the product, but at the end of the day, the product is what people at the end of the day end up using. So I think I would like to leave it on that line, and I would like to. That's my
Hey,
two bits.
Tanul, one for disregarding a banker who will not know anything about branding.
No,
That's an area
I
of
was
interest.
coming to you, Sushant. There is no
No, no,
way
no.
that I can
Nobody
disregard.
comes to a banker for asking any questions on branding. Okay, I can assure you that. But no, but I'll tell you one thing very, very, very quickly. But because it's an area of interest again, is that it's very, very important to spend time. See, the assumption like that said that you have a good product. You have a shitty product, it's never going to fly, no matter whatever
Right.
branding you do, right? But assumption is that if you have a good product, but if you don't brand it and people don't know about it, it's such a waste, right? It's basically about your whole Indian old saying which says jo dikhta hai wo bikta hai. If you're not out there, you're not talking about your brand. You look at brands like that, like Mama Earth, etc., right? people will have the view on quality and where they stand, etc. But look at the way they've pushed it in the market, in such a crowded market where you'll always think that it'll be tough to survive. But I think in every product, if you're able to kind of push your product out and say the right things and resonate with the people, it does it expedites your growth. And if you don't do it, you might be sitting on a great product, but your growth is not going to be as good if your branding and your reach through your communication is not good. So I think that's my quick 2 bit on that.
I think that's wonderfully put. So again, banker's perspective, but
I think
obviously,
Tanul, I think DBS does a very good job about it because they don't tell you to bank more; they tell you to bank less.
that's right.
Yeah, look at that. Yeah.
Ah,
I was going through their branch office sometime recently, and I read that line, and I was really intrigued by the way they sort of
nice,
spoke about it. So
nice.
Yeah,
All right,
because the
actually,
initial debate there around that was, are you telling people not to bank?
ah. No, but I think I
So the
understand what it means. I understand what that means. It's intelligently put. So yeah. So, but that was the last question. Thank you. You guys were wonderful. You guys had engaging conversations, gave us key inputs in key areas. And if the startups here were listening, I clearly found richer tech, overseas payments, heavy, freight insurance payments, pain areas in tier 2, tier 3 cities, approach to regulations, build with accountability, regulations will figure, and that you've got a whole new bunch of global players to leverage. And I hope you have a fun weekend. Thank you so much for joining us. Thank you, guys.